Good morning, and thank you for joining us for today's Loan Data Coffee Talk. My name's Sean O'Brien, President of QuickRate, and I'm pleased to be joined by David Littleton from IntelliCredit. David, you want to go ahead and introduce yourself?
Sure. I'm David Littleton. I'm Director of Data Analytics and Product Management at IntelliCredit. Many of the software solutions that we'll look at today, I was a key piece in designing those tools as well as the implementation of them for our clients. So happy to be here. Thanks, Sean.
Thanks, David. So again, just a reminder, as we go through today's presentation, we will send out on Monday a copy of the slides and a link to the recording during the presentation today. If you have a question, please submit that through the chat feature or the Q&A box. I'll be monitoring those, and we'll take those either as they come or in an appropriate spot or pause during the presentation. Again, I think, what we've tried to do with these coffee talks, no surprise for our repeat attendees. For those of you new to the coffee talk, welcome. But really, we want to, just in an informal way, talk a little bit about, how our tool can help you, what we're seeing in the market, and why we think, what we're building here with IntelliCredit can be beneficial to you, but also try to take a little bit of the mystery out of what it takes to actually get up and started. Again, we encounter a number of different fintech solutions, some very difficult to get up and running. I think one of the things we've prided ourselves on here at QuickRate, and now again here with IntelliCredit and Quick Analytics, is just kind of the easy transition to get you up and running and bring you a product that is affordable and can give you some real value. So today I thought we would start off just what we've been hearing. I think this has been an interesting year. Obviously, the economy has remained pretty strong. Unemployment has remained very low. 50 multi-decade lows. Inflation, while still running positively, the rate has certainly slowed. And so we've been waiting, it feels like, for about a year or 6 months for sure of potential cracks in credit quality. And while we've started to see and hear those in commercial real estate and some in multifamily, I think in the most recent couple of regulator panel presentations I've attended, we've really started to see and hear a little bit more clarity from regulators, concerned not only with just credit quality, but more directly just with the credit admin that's occurring in the banks, where they feel it's somewhat a bit subpar. And so we've begun to hear of more MRAs, again, not necessarily directly related to poor credits, but really to the administration of the portfolio. I was in California for a conference, and the San Francisco Fed made it a point that credit risk management, particularly in the CRE portfolios, was at the top of their mind from a supervisory item. They talked about just, again, the basics of making sure, banks are able to articulate clearly just kind of what's happening in the portfolio, have a good grasp of metrics around their portfolio, particularly as it relates to their past due loans, their watch list loans, their non-accruals over 90 days. And really what they're looking for, again, are risk rating changes and concentrations. And within those concentrations, what kind of LTV numbers are they looking at? What kind of debt service coverage are we looking at? And I think that's started to play out a little bit, even in our loan review work, where we started to see the number of credits that are due for a risk rating change has certainly increased this year over last year. So if nothing else, be sensitive, be thoughtful, be reflective on your processes, and make sure we're taking a look at those because what we don't want to have happen is for a regulator to come in and start marking down, loans that you haven't already been on top of, right? That's just going to invite more criticism. So be out in front with the ones that you suspect are problems, and make sure you again can articulate the story that you want to share with those third parties. And so that's where loan data analytics really kind of comes in. And at this point, I'm going to turn the presentation over to David, and he's going to talk to you about how our analyzer product can assist you with kind of mining and understanding your own data. David?
Yep. You want me to take the screen as well?
Yes, I'll stop sharing and you can take it.
Okay. Let's see here. Okay, so why loan data analytics? When it comes to loan data analytics, obviously, we know that your loan portfolio is the bank's DNA, or the credit union's DNA. And understanding yourself and your DNA through data analytics, meaning transitioning from the what to the why, and really being able to dig deep into the data, really helps you write your own credit script and understanding where you've been, where you're going, and the path that you are on. And the value we see in that level of understanding is around having conversations not only with regulators, as you see here, but also board members, management, etc. We find that our users at IntelliCredit develop a really deep understanding of their loan portfolio, and we like to share that with as many members of the community banking environment as we can. But to me, the real reason why we're here and why loan data analytics, why we think it's important, is because loan data analytics core reporting really should be easier, and easy to implement, easy to maintain, and easy to deliver results. And so with IntelliCredit, we think that we offer each of those three things. So how easy is it really? So to get started, you just take your raw core system loan portfolio data in the rawest, simplest form, and send it to us. We do all of the work with mapping it and matching it up in the IntelliCredit system. We schedule a 1-hour training session, and then you're all set. You're ready to gain value from the tool. And we'll get into many of the ways that the tool provides instant value in just a bit. So Nate Oval from Bank of Elk River gave us this quote in response to a survey, actually. But so what he said was, the more I try different things, the more value I see and I can derive from the tool. You can't break it, mess around, get dirty with your data, and you will find things that need to get fixed, etc. And we'll get back. We have another quote from Nate as well a little bit later on. But I thought this quote fit perfectly with the narrative that I want to provide today, is that in the tool, we get a lot of value from day one with minimal effort. But then as you invest time and dig into the data, there's even more value to be had once you have the analytics at your fingertips. So now we're going to take a first look at the tool. So let me tab over here. So what we're looking at now is the IntelliCredit Portfolio Analyzer. So this is a bank, a demo bank, Pawnee Community Financial, that we've loaded the data in for. And we're going to look at the report layouts that every bank gets from day one in the tool. So what we're looking at now is a credit overview, where you can see two selected reporting periods and see summary information about those periods, including balances in special mention, classified, non-accrual, and past dues, etc. But then importantly, you can see the change that's occurring in each of those areas. And so I can click on the $2 million increase in classified loans, for example, and get a complete breakdown of how we got to that bottom line aggregate figure of the $2 million change in balance outstanding. So like going back to what I mentioned a little earlier, is understanding where you've been, where you're going, how you got there, etc. Made very easy through something like this. We also break it out into each of your individual ACL categories, so you can see the change very simply, not only for the total portfolio, but within each specific area of focus as well. This next report here shows the loan count, balance, exposure, growth rates, percentage that are currently special mention, classified, currently on non-accrual, currently past due, within each of the selected categories. In this case, we're showing call report code or FFIEC code. But you could also look at this by loan officer or any other metric that you see here, and you can even add metrics to this list. So in that core system data, many times there are codes that are different at every bank and specific to that bank, and we can add those into this list here. So any level of analysis that you're used to can be easily incorporated into this reporting tool. Next here, we show the concentration of capital over time within selected product types. So here we have regulatory CRE selected, so I can see the individual concentrations of each of these call codes, but then the aggregate across the bottom. And this particular bank is hovering around that 300 threshold, but I can select a custom grouping of FFIEC codes as well very easily. So the report actually jumped over here to the right-hand side, but here it is right here. And so I can see the breakdown of concentration within each individual category as well. I could filter down to just agriculture, for example, if I would like to, very simply. So if I did 1B and 3, very simple to sum those together and see what my concentration is in ag is, which for this bank is moderately high. So capital concentration filtering, you can also do this through other categories, and this is something that I'll get into later. You can even do this by industry. You can do it by NAICS code industries and so forth. So there are various ways that you can stratify the portfolio to get into that capital concentration analysis. Top borrowers, we're showing just the top borrowers in this portfolio so that we're looking at top 10, but I can easily reference top 50 if I would like to, and I can show relationship data instead of borrower data. Lots of flexibility there. And then in this report, importantly, is we're showing the concentration of capital within to each relationship, as well as the cumulative concentration of capital. So I can see the top 9 relationships in this portfolio make up 430% of the Tier 1 capital plus loan loss reserve. Then we have a risk grade distribution that's looking at the balances based on risk grade and product type. And again, you can change the stratification here. But I like to think of this as a little bit of a heat map of where the risk lies by product type and by risk grade. Down here below, we show portfolio distributions based on risk at specific points in time. And so what I can do is I can select multiple periods, but I'm just going to select 2, but I'm going to go farther back in time to get a little bit more of a distinct change. And I can see the change has gone, the portfolio has gone up at every risk grade. So that's obviously just general portfolio growth. So what I'll do is I'll control for that to a degree by making it a percentage. So the distribution based on the percentage of balance that are at each risk grade. So this is good information showing me where I was a year ago, or let me go back to the other year once again. I can see where I was a year ago and the flattening of the curve, the risk curve in this portfolio that's taken place over the last year. Additionally, one thing that's very easy is I could simply, if I wanted to start digging into this even deeper, I could duplicate this report. Then we get a version of it on the right-hand side. And then, so I'm going to configure this the same way. And then I could very easily drill into one specific loan officer, say, for example, or I could drill into just my CRE loans. And see how a specific subset of the portfolio is migrating juxtaposed with the portfolio as a whole. So that's just one simple, easy way where you can start to dig deeper into the data. This past due distribution, this is showing where the balances are by duration of delinquency within each product type. We have a non-pass loans report that shows you not only a list of each of the non-pass loans down here below, including TDR and non-accruals, but we show the change that's happening in each of these risk cohorts as well. Most notably to me is the weak pass category, because weak pass is one thing that gets overlooked perhaps too often. But you can see this portfolio had an increase of 2.9 million in weak pass, and that could be a result of many things. It could be loans that were special mention getting upgraded, or it could be which would be a positive, or it could be loans being downgraded. So this drill down gives me that breakdown and allows me to see, does that increase in weak pass indicate a positive trend or a negative trend? This next one here, delinquent loans. This is showing me a list of all of my delinquent loans. Very simple. And then it's showing me, similarly to the previous report, how each of these cohorts of days delinquent are changing. Then we have a pricing for risk chart, and this is one that we'll also get into a little later. But this is showing the weighted average interest rate within each category and risk grade, and it's highlighting any instance where we observe a decrease in weighted average interest rate, but an increase in risk grade. So I can see in secured by farmland loans, we go from 5.5 to 5.24 to 4.9. That's why we've highlighted these cells here. And then lastly, just a vintage chart that gives you some analysis based on the origination year of the portfolio, including the weighted average risk grade for that origination year and the weighted average interest rate. So all of these are the reports and kind of the template that you start with in IntelliCredit. Really your day one value. This is something that, again, every bank receives. And now for all of our clients, what we do is we actually send this report template as a PDF each month to each of the users in the system. So even if you're not logging in and making an active playing an active role in the tool, you'll still get this report in your inbox. But I'll show you how easy it is for us to do that, because you all can do that too. So if I just click this generate report button, I can select all, and I can add a cover page and name this whatever I would like to. But then I will download the report, and just after a few minutes, these reports will download, or not a few minutes, a few seconds, I mean. These reports will download with that default template, including any customizations that I may have made and that I actually, in fact, did make. And so you'll see this is the report PDF export that is, in my opinion, a very polished report that you can use for that board reporting or any sort of other internal reporting process. Sean?
Yeah, David, I think this is a great point. So again, I think one of the things we're trying to emphasize is the fact of A, how easy it is to get started, but two, some efficiencies that we can bring to the bank. And this is a great example. If you think about how much time your team spends on maybe putting together a board report about your loan portfolio or different credit metrics. One, obviously you can start with these standard reports, but as David's going to show you, and we can help you, is, template anything that you're currently doing. And again, make that process much more streamlined. It's part of the reason we do the trial, to give you time to kind of get your ducks in a row, share with us what you're doing, how, we can replicate reports, get reports built. So A, again, hopefully you get better visibility, but two, you can, really start to save time in what you expend on preparing, whether it's for your loan committee or your board reports. And then three, again, you can potentially add and supplement your existing reporting with, the tools and the available reports that we have. So, David, I just wanted to add that. Back to you.
Yep, thanks. So that's actually the perfect capstone to what we were discussing, because the next portion that I want to get into here is an example or a few examples of reports that I have lifted or seen from clients in this tool. And to navigate to that place, what I want to show is this drop down here. So this is a list of all of the available templates that have been created. So if I click on a different template here, it's going to change my navigation completely. And that's something that every user can create their own template in this template builder here, but we're not going to get into the details of that today. But what I want to show is this template that I've created specifically for today that includes those reports from actual clients in the tool. So I'll click through each of these, and these will give you a sense of some of the reporting customizations that can be conducted in the tool. So what we're looking at now is a portfolio synopsis. So this is showing loan count, outstanding balance, exposure, etc., LTV, and so on. And each of these columns were created custom. So if I could even add another one here, and I get this interface that allows me to configure the column. But if I just open up this LTV column, for example, you can see it was as simple as this. I just named the column, said, give me the LTV weighted average, and that was it, really. There are some display options and so forth. But then that shows here the weighted average LTV within each of the individual periods that you see across the columns. And so this is all showing the total portfolio. Now you could drill down into one of these individual ones and make it more narrow, but this is showing the total portfolio right now. But one thing that I can do very easily is use this filters tool to say, I have this loan officer named Sam Powell. Let's say I'm just going to apply the Sam Powell filter into this report. So now I'm seeing this same synopsis, but for the 285 or et cetera, loans that are Samantha Powell's loans. So it's very easy to go from that total portfolio analysis into any individual filtered subset. So these are some example filters that I have here, but even these are completely customizable to your specific interest based on your data. And then you see they included that risk grade distribution chart so they could see how the risk was migrating over a period in addition to each of these individual metrics. The next one here is a simple top relationship report. So this one looks a lot like what we looked at a moment ago, but they also included a list of each of the loans to the within the related entity. So for the top relationship, it's just one borrower. This next one has several borrowers involved here, and so it's just a total breakdown of each of those individual relationships and the note information about each of them. This next one is a new origination pricing report. So this is showing the change in delinquencies based on new origination. So the filter is already applied here for newly originated loans. And then this table, which is the pricing for risk table, also has that new origination filter applied. And this is a report that I think is brilliant because, when it comes to pricing has changed drastically in recent years. And so being able to narrow down the pricing for risk table here to a specific origination period really helps you see more apples to apples comparisons about what the pricing in the portfolio looks like. And so this is shown by FFIEC code. But one way that you can look at this that I also find very interesting is by loan officer. So this specific report right now is showing the breakdown by loan officer with a weighted average interest rate within each risk category of loans that were originated in the past 6 months. And it was really just a few clicks to get into this type of information. And I changed this report around, but there were actually two versions of the report on the page. So this one, the one at the top is FFIEC code, and the one down below is by loan officer. The next one here is an upcoming maturities report where I can see this table showing me information about each of the about loans that are maturing within each of these different cohorted periods. And then showing me a list of what all those loans are. So this bank doesn't have any maturities coming up in 30 days or 90 days, but here are their maturities coming up in the next year and so forth. Then beneath that, we have loans maturing in the next 3 months broken down by loan officer. So I can see to each officer, so Carlos Ruiz, Jake Thompson, et cetera, I can see a list of each of their loans that are maturing in that 3 month period. This next report here is a watch list report where we're looking at just all of the watch list loans broken out by loan officer once again. But then importantly in this report, we've chosen to include slightly different data fields in this report. And we've given the ability to upload documentation, whether it be a workout plan, what have you, and add comments. And this report for this bank, their comments section, their board specifically requested a comment section that gave insight as to whether any of these watch list loans had that there had been any legal action that had been taken on those loans, and those details were included in the comments section, and then therefore thereby provided to the board via this report. And then second to last here, this is a similar report broken down of delinquent loans by loan officer. So you can see all the delinquencies broken down by based on each officer. And then lastly, and this is one that I have gotten personal requests from many banks here, is concentration reports by industry. And so this is a specific industry code that this bank used, and you can see the concentration of capital in each of these industries over time in this report here. Very simply, very easily. And so those are just a few examples that of client examples of ways that you can customize the tools in this system, in addition to the templated reports that come on day one. So let me tab back over into the presentation here. So we went through the client scenario. So then the second quote we have from Nate is the standard reports, which were those reports that we looked at initially that every bank gets, are valuable as is. The ability to apply filters to represent the standard report for specific timeframes selected is also excellent. Ability to build query and pivot table reports is also valuable. He said it's easier than core systems and internal bureaucracy to get at timely information. And that last sentence is such a key piece here. Is, like I mentioned at the outset, IntelliCredit is easy to implement, maintain, and gain value from. And all of those things, I think, drive efficiency and really help you, of course, provide the information and the analytics that you need internally. So what we're offering is a 6-month trial period. So the process is very simple. We just get your data, we train you, and then we begin that 6-month period. And during that 6-month period, it's actually partnered with what we call the shared administration period, which is essentially a heightened commitment of support and assistance in report building and so forth. Many of our clients send us a quick wish list of reports they want to have, and we can, some of us that are a little more experienced in the app can spin those up pretty quickly. And so that's the kind of the bottom line of this presentation is a 6-month free trial that we're offering. Sean, did you want to chime in?
Yeah, I think just a couple of things, as David pointed out, right? We really do look at this period as a shared administration, right? Again, I think obviously there's a learning curve, but we recognize that, and so we want to assist you as best we can. So each month when a new file is going to get uploaded, there may be something month to month that you thought of after looking at the data last month and thought, hey, I'd like a report on this. It also allows you to, as David pointed out, share with us what you're doing today, and we can get those replicated, teach you how to build those reports, and then just manage those going forward. But it gives you some time and comfort with the tool. We've focused on the analyzer today, but within this as well, you're going to have additional capabilities like with the ability to do annual reviews in the tool. So there's a whole lot of horsepower here that we really haven't even focused on yet, because we want the first step to be this portfolio analytical tool where you get comfortable with your data, you get comfortable, kind of mining it and owning it and understanding it and really dissecting it. And then from there, there's a whole lot more we're going to be able to show you that you have the capabilities of doing, but we want to be thoughtful and not overwhelm everyone with everything that the tool can do, but really get you into a position of comfort and knowledge where you can really become you really own your own data in a way that, again, we think is just helpful in a myriad of different ways. And so again, that's why we have the 6-month free trial, because we don't want you to feel rushed. But we do want you to get in the habit of looking at your data every month. And then, from there, really start to build on what you can do once you have access to, all of your data in that way. All right. Let me check to see if we have any questions that have come in. See there. Okay. I don't see anything. David, you want to any closing thoughts or comments for everybody today?
No, just to reiterate, if you want more information, you can email us info@intellicredit.com, or you can visit our site intellicredit.com to submit the trial request, or of course feel free to email me directly, just david.littleton@intellicredit.com. So again, the purpose of this trial is for us to really prove to you how easy it is to gain value from this tool and take the rawest form of that core system data and put it in a tool that you can really easily gain value from.
Yeah, David, maybe, I was gonna say advance that next slide, and really kind of break it down for them.
There we go. Yeah. So you all, the setup is you all just provide those initial files, very simple, and your risk grade scale and so forth. And we load all that information in for you, and we have the shared administration period, the active support, and we help you become the expert on your data. But you all just review the analysis and so forth. And then you all have free reign to load your own data. The way it's configured is it's a simple drag and drop, click upload type of process. So you can upload historical data. You can upload data every week if you wanted to. We recommend every month, by the way. But this is kind of the breakdown of the IntelliCredit setup, and then post implementation, the roles of your bank, and then the role of IntelliCredit. We have a few historic webinars that are on YouTube, as well as our site at intellicredit.com/resources. One was with Zane Smith of American Bank, and then the other was with Mitch Moss of Outdoor Bank. The Zane Smith presentation was a little bit more focused on the portfolio analyzer, similar to what we did today. And Mitch Moss is a user who not only uses the portfolio analyzer, but also uses the review tools that are in IntelliCredit that we didn't cover at all today, but because he heads up their internal loan review department. And so if you'd like something more focused on that aspect, that would be the Mitch Moss version, because we always know that in addition to the quote we provided today in the system, hearing from actual clients is immensely valuable. So if you'd like to do that, those are, of course, available. And so last opportunity, if you'd like to ask questions, we are an open book here for a few minutes.
Yeah, and as we wait for that, again, just a reminder, as David mentioned, there's a whole lot more horsepower. It is all one subscription, unlimited users. Again, the data setup is really straightforward. We really made that a priority, much like we did in Quick Analytics, to make the user experience, just everything about this, very, very user friendly. So certainly, welcome the opportunity to show you, what you can do with your own data.
So someone asked a question: can you create a portfolio watch list and compare those totals against capital? So yes, and I can demonstrate that quickly. So if I go to this watch list report that's here, so this is a version of a watch list report. I know from experience, certain banks classify watch list loans a little bit differently, but you could classify them however you'd like. And meaning some banks include weak pass loans, which by our definition is just the lowest rated pass, right above special mention. But you can completely define how you define watch list loans, and then you can, of course, create a list here of all those loans as I'm showing. But then you asked whether you can compare those to capital? And so the answer to that question is also yes. So what I would do there is if I went to concentration by industry, there are several ways I could show this, and without knowing exactly what you want, I will just show both of them. So I could show this just I could show this broken down simply by risk grade. So I could see my criticized loans. Here's the percentage of capital for my criticized loans. Here's the percentage of capital for my classified. And here's the percentage of capital for my weak pass. Now, I also could show by...
If I can interrupt for a second, sorry, if you can go back to that for a second.
Yep.
But also here, I think is where we can emphasize again, all of those percentages are links that you could click on and get a list of those loans.
Yep. Yeah, that's something that I think I actually skipped over today is all of the values that we see throughout the tool are clickable, where you will just see the list of loans that are driving whichever metric it is that you clicked on. So you can very easily see that here. Now, taking it one step further, let's say that I still wanted to look at this by industry, or I still wanted to look at this by loan officer. I'll leave it on loan officer, but then I wanted to see these numbers not for the total portfolio, which it's showing now, but rather for only watch list loans. And that's where I would apply a filter here, where I could create a filter very easily and just say, show me only the loans, or show me only the loans that, I guess let's just use note risk rating here is one of, and then this is actually not allowing me to do what I was trying to do. I'm not sure, I'm not certain why, but I think this, well, let's see here.
I was gonna say maybe our
So typically,
everything
so the way this works is I would select risk grade from this list here. You see all the available data points, but for one reason or another, it's not coming up, which is obviously an issue that I just need to address. But the idea is that you would be able to just very simply go to you would very simply just be able to say, let me just use note risk rating, and you would say the risk grade is one of, and then each of these individual categories. And I think this is an issue just with the demo institution that we have here. But so then you would be able to hit apply, and then these numbers would still be broken down by the loan officer, but showing only for loans that you've identified as being watch list loans. And then it would still show those totals at the bottom, but then you could see which loan officer has the highest capital concentration as well. So depending on how you wanted to show it, there are multiple ways to show it, but the idea of showing the concentration of capital for watch list loans is something that would be very easy to do.
Let's see if there's any other questions or come in. Thank you for that question. I think that I'm not seeing any more. So again, just if we want to advance the next slide, David, we'll just kind of go through it again. So just a reminder, we focused today on the portfolio analyzer, but as you can see on the left-hand side, with that comes, the ability to do annual reviews and use this for even internal loan reviews, if that's how you handle reviews in your institution. Of course, we do provide third-party loan, external loan review. So if you're looking for a proposal or a quote, we're happy to provide that as well. And then at the bottom, again, I think it just, it's important to reiterate, there's really no software integration necessary. This is really, you export us what you can from your core, and then we ingest it and show it to you. And then from there, again, a lot of conversations start about additional data that you may want to see that's not in that file. But if it's in your core, we can, if you can get it to us, we can display it for you. And so, a lot of times this 6-month trial provides opportunities to make sure we're capturing everything you want. And if not, things you may want to start capturing so you can monitor as well. So it does really provide some time to be thoughtful about how to best, take advantage of your own data. David, any comments around that?
No, but just to kind of walk through this graphic a little bit is obviously today we focused solely on this portfolio analyzer here. But then the other tools are here. If you would like information about these, we're also of course open to conversations about those. And then we also have a loan review service that we that we conduct as well. That is tech enabled, but obviously performed by credit experts.
Again, we've been growing. So again, we're excited about what we're building. Again, I think it's, certainly been enhanced as our customer base has grown. Every bank approaches things like, again, I'm a director in a small community bank. And like I say, our board reports and our, what we use for loan committee, right? We're creatures of habit. A lot of times you have those. And so, we've been able to, kind of improve those. But also a lot of times they come to us because your examiner says, hey, I think the board needs to see this on a regular basis. And so we recognize everybody's reporting is going to be a little bit different. And that's why we really think one of the huge advantages of this tool is its nimbleness and to be able to really be, personalized to what it is you and your team are doing. So again, I think certainly encourage you to take us up on our offer. Okay. Just a reminder, we do have as David pointed out in the resources tab and on the website, a number of different ways to access past webinars and videos. So again, we want to make sure we're sharing with you as much information as we can. And giving you the ability to kind of digest it on your timetable. Certainly appreciate everybody joining us today. We will be back later this month for our CECL coffee talk, and then look for our upcoming loan data coffee talk. We'll be back again probably in August with some new topics and some new reports, and again show you different ways that banks are using this. And we might even have a banker on as well next go around. David, any final comments before we let everybody off to their day?
I'm just excited to get to know anyone interested in the trial, and excited to show you the value you can get from IntelliCredit.
Fantastic. So thank you all very much for attending. We'll leave the contact information up. We hope you have a great day and weekend, and we'll talk to you soon. Thanks so much.